We start today's market talk. Markets ultimately focus on core issues such as earnings, business prospects, currency, and inflation. So, for me, it is business as usual after the budget, as we need to exercise caution. The reason is falling rupee versus dollar is a challenge as it opens doors to imported inflation and can drive household expenses higher. Time will tell if markets will take the news of increased credit to farmers positively for banking stocks or otherwise. FM has announced 14.82 lakh crore gross borrowing for the budgeted year. Of this, 11.54 lakh crore will be from dated securities, rest from small savings schemes. So, in times of higher borrowings, can the RBI cut rates aggressively from here needs to be also seen. Market outlook Budget 2025, there is a pivot to consumption. Starting 1st April, anyone earning up to 12 lakh would effectively pay no tax. Budget is aiming to leave more income in our pockets to spend. Consumption stocks moved up from biscuits to ACs, so all the discretionary consumption will get a boost. Reviving rural consumption demand, uh, proposals to boost agriculture schemes such as PM Dhan Dhanya Krishi Yojana to enhance agricultural conditions in 100 districts that have low productivity and moderate crop intensity, etc., with better loan facilities will help them. National mission for edible oil seeds, cotton productivity, etc., is also positive. And Kisan credit card limit was increased to 5 lakh from 3 lakh. RBI may consider cutting policy rates when its Monetary Policy Committee meets next week. Since the government has stuck to the path of fiscal consolidation and has kept fiscal deficit at 4.4% of the GDP, and in December, CPI inflation moderated to 5.2% from 5.5%, and core inflation that excludes food and fuel remains below 4% and is expected to decline. RBI may cut rates next week. As it is, they have announced a series of liquidity boosting measures. Government capex and key support to defense, power, and railways needs to be analyzed. I'll show you this aspect in detail subsequently. Uh, okay, before that, no negative domestic factor for bond markets this year. So on net basis, borrowing is slightly lower as compared to FY25. RBI is emerging as an eager buyer of bonds, so the yields are likely to continue to ease and could go to around 6.5% for 10-year benchmark bonds if RBI cuts repo rate next week. Now, regarding this capex support to defense, power, railways, etc., which needs to be analyzed, the effective capex was expected to grow up by 20% in current fiscal, but the growth is muted. Government has little headroom to boost capex with estimated loss of rupees 1 lakh crore from IT revenue, income tax revenue that is. Also, there is a risk to tax buoyancy due to slowdown in the economy and stock markets. Hence, it is not surprising that capital goods, engineering, defense, railways, and infra stocks were sulking post the budget. Now, the biggest problem is the Trump, who has ordered steep tariffs on goods from Mexico, Canada, and China. He signed an executive order imposing 25% tariffs on Canada and Mexico and 10% tariffs on China. Energy imported will be impacted with 10% tariffs, and uh, Canada and Mexico have retaliated. Trade war will slow global growth and reignite inflation. India's tariff gap is much higher than even Vietnam, Indonesia, Mexico, China with the US. Hence, India remains vulnerable to tariffs. Expect dollar to rise, safe haven buying in gold. China may depreciate yuan and dump goods on rest of the world if they are not able to sell to US. Now coming to certain budget parameters. So if you see here, over the last 5 years or so, the fiscal deficit has declined and is now projected to be 4.4% for FY26 as per the B. The capex has gone up. The RE of FY25 was 10.18 lakh. So there is a approximately 10% increase to 11.21 lakh crore for FY26 vis-a-vis FY25. Trends in government's gross and net borrowings. So the gross borrowings have gone up from 14 lakh crore to 14.8 lakh crore, while the net borrowing, which in terms of dated securities is around slightly lower at around 11.5 lakh crore. Uh, this is also because it is due to higher repayments this year, uh, which are expected because a lot of government bonds are expiring. Tax revenue net to center is expected to grow along with the nominal GDP growth of 10.1%. So the gross tax revenue is expected to grow 10.8% to around 28 lakh 37,000 crore. Looks optimistic because the personal income tax growth of 14.4% out of it seems to be on the higher side, and equity market performance will determine the revenue from capital gains and STT. Non-tax revenue is also expected to go up around 9.6% or so to 55 lakh 83,000 crore. Government expects RBI to give 2.6 lakh crore dividend along with other PSUs. Now, coming to the defense expenditure. Defense expenditure, there is no cutback as such in the defense expenditure. So the revenue expenditure has gone up. The capital expenditure is projected to go up at least 10% to 1 lakh 92,000 crore. So the total defense expenditure as percentage of GDP, defense capex as percentage of GDP is around the same level of 0.54%. Now, capex related expenditure is also expected at uh, around 10% higher from FY25 RE to around 11 lakh 21,000 odd crore as per the B, which is forecasted. Grant in aid for capital assets is higher, resources for PSE is higher. Railway capex, including extra budgetary resources, which like IRFC borrows from the market to finance the railway assets and projects, is expected at the similar level as FY25 RE at 2,65,000 crore. So there is no growth here. Effective capex is higher and percentage on nominal GDP is also higher, around 6.3%. So the if you see here where the rupee is going, so the point here is where the market sold off was that the interest payments are likely to be 20% of the total expenditures, along with others like defense, finance commissions, centrally sponsored schemes, etc. Now coming to the US, US markets closed higher, but retreated on Friday. So overall for the week they were higher. Beginning of week, there was a rise of DeepSeek, came as a sobering reality check for mega cap US firms, basically tech firms, and forced people to take a look at their valuations. Then FOMC did a hawkish hold on interest rates due to inflationary risk, and then four of the magnificent seven stocks reported their results. And at end of the week, the with the news of Trump's tariffs came into play, then the market sold off. So the bond yields, which were falling, also slightly rose, but we'll have to see them subsequently. Now, depending on the imposition of tariffs, etc., the dollar index, which was retreating, has bounced back to 108 level. So this has to be watched now. Once it crosses this 61.8% retracement of the complete fall, then it can go right up also. Brent crude has retreated and now is on this downward trend line support. So this is coming down because more crude and gas is expected out of US and restrictions on the Russian oil have been reduced. Gold continues to go up, made a fresh high of around 2,800 uh, dollars to an ounce based on safe haven buy. Copper was at the similar level, not much move here. Bitcoin moved up, and but it then corrected at the end of the week due to likelihood of tariffs coming on. Nasdaq was up 1.36% last week, and Dow Jones was up 0.27%, but they are in the rising channel, so they dipped to the bottom of the rising trend line, but have taken support and have gone up. And even on weekly charts, it's above the 20 EMA. India VIX declined 13% only on Saturday only. So from 19 odd level, which it was there during the week, it has come down to around 14 level now. So this has to be watched because people have closed their positions, but now this has to be watched carefully. USD INR had retreated, but then again has started its rise and has touched that 86.51 level. Nifty has made a bullish engulfing candle now, but it has come at 50 EMA. So once if it trades above this level, that will be positive, and it has to go above this 23 930 or 24,000 level to show some strength and make a kind of a higher high. Regarding on the daily chart, so if you see here, this is a declining trend line. So it tried to break there and took got resistance there last week. So last week 6 trading days were there. Made a low on Monday based on the DeepSeek news in the US. Went to around 22,800, but then steadily rose during the week. Three green candles, and then kind of a doji on Saturday. So we'll have to see if it can trade above this declining trend line, then it will be positive. But since it is above the 20 EMA, that is also positive. Hourly chart candle, if you see, it made a gap on Monday and then has been steadily rising. Then there was a gap on Saturday also, gap up opening uh, on the premise of a good budget. But it is now it becomes vulnerable. But till the time it is above this 20 EMA of 23,315, it is positive on the hourly chart. If it breaks this level, then it will again become negative. Now Nifty Bank again made a bullish engulfing candle similar to the Nifty, and it is now touched the 50 EMA and then reversed from there. So we'll have to see what happens from here. Nifty Bank on the daily chart has broken through the declining trend line. So we'll have to see, but it has got stuck at that neckline of the head and shoulder pattern it was making. So we'll have to see. But if you see here, it has made a double bottom at around 48,000. So we'll have to see if this provides support and or a W kind of thing has been made. If this provides support, it can head higher. HDFC Bank was very volatile on Saturday. It has risen from the lows it made after the results, uh, but uh, but it got stuck at the moving averages. So right now it is above 20 EMA. That is positive on the daily chart, but it got stuck, faced a kind of resistance at the upper end of the 50 and 100 day moving average. Reliance has risen from the bottom, but has still closed above the 20 EMA. But if it breaks this 1250 level, then it can test this 1200 level. HL made a bearish engulfing candle, and it is looking weak, and it has closed below the 50 EMA, and all the moving averages are also trending lower. So it is expected to make fresh lows, and it went down with large volumes on Saturday. Zomato was on the other side of the consumption story. So it was up 7.25% on Saturday, and it has risen from the lows of around 205 it had made, and now it has crossed the 20 EMA. So if it rises from here, it has to cross this 250 level for further strength. Nifty Midcap index was up around 0.4 percent last week, and is generally poised at that support it was having uh, from where it had fallen. So this level of has to be critically held, or it has to trade above this. Similarly, for small cap index, it made a low last week. Then it has risen, so it has to go above this 17,500 odd levels for some strength. Now I'll cover two stocks. First is Radico Khaitan. Prestige and above brands sustained strong performance with volume value growth of 18 and 25% and 6% realization growth despite the challenging demand environment. Regular segment witnessed a sharp recovery with 13.5 and 15% volume oblique value growth on a low base and opening up of Andhra Pradesh state. Gross margin expanded by 118 basis point year on year to 43%, driven by ongoing premiumization and a relatively stable raw material environment. Though food grain inflation remains a concern, expect it to report strong performance with sales EBITDA earning CAGR of 15%, 26%, and 38% on the back of strong growth in prestige and above, that is 15 to 22% growth in those brands and volume value growth over next 3 years, and a margin improvement on the back of backward integration and premiumization of portfolio. If you see their quarterly results, the revenue grew 11% year on year and 15.9% Q on Q. Basically because Q3 is that end of the year kind of festive season. EBITDA margins improved 28% year on year and 12% Q on Q. And margins have improved 191% and profit after tax grew 30%. So the volumes grew in prestige and above and regular also year on year. And IMFL value also grew around 25% as per the total sales which it has done. Realizations also have improved in prestige and above per case to 1765 rupees. So that is positive. So if you see here, gross margins expanded 118 basis points, with EBITDA margin expanded by 191 basis points. Realization growth 5.6% from prestige and above, with 1.2% for regular. So the margins improved. EBITDA grew 29% year on year, amounting to 180 crore. Volume value contribution from prestige and above brand was 51% and 73%. So as the volume value contribution from prestige and above improves, the profit grows and the margins improve. So it is expected to grow around 15% over the next 2 3 years. So it is expected to do around 5,474 crore of revenue in FY26, and it is expected to do a PAT of around 511 crore and a EPS of around 38 rupees in FY26 and 50 rupees in FY27, taking a mean of around 45. It can easily trade at around 50 times. The ROE and the EBITDA margins are improving. So considering that 45 EPS and 50 times, it should generally trade at around 200 2,250 odd levels. That should be the fair value. It rose around 9.26% on uh, Saturday. So it has gone up, but closer to this 2200 and this 2100 level, it should be a decent buy where it had made a low. It took taken support at 200 EMA this month only. So watch out for this stock. The next stock is Allied Blenders and Distillers. Overall volume grew 11% with prestige and above popular segment volume growth of 12% and 11%, benefiting from strong consumer demand during the festive season. Gross margin EBITDA expanded by 745 basis point, 535 basis point year on year to 42.8% and 12%, driven by premiumization, cost saving measures, favorable state mix, and sourcing efficiencies. Strong performance to continue on the back of new launches in its premium and luxury segment and scaling up brands in the prestige and above segment, backed by strong distribution network. The company is expanding into super premium whiskey category by acquiring Fullerton Distilleries brand of rupees 39.5 crore, and 51% stake in Good Barrel Distillery for rupees 9 crore. Enhances premium rum portfolio with Rock Paper Rum as the flagship brand. Acquisition of a distillery, Meenakshi Agro Industries Limited, was completed in December, with operations at the existing 11 million liters per annum facility set to commence in February 25. The opening up of Andhra Pradesh resulted in doubling of volumes in that state in the current quarter compared to same period last year. Grain and ENA prices are expected to remain neutral to soft, while glass and PET prices are likely to stay stable. Plans are in place for expansion in export markets, with label approval secured for USA and supplies set to begin in first quarter FY26. Zoya will be launched in UAE by fourth quarter FY25. So if you see here, their revenue was up 8.8% year on year and 12% around Q on Q. While for 9 months it is up 1%, 1.5%, but EBITDA is up 61% for 9 months and 96.5% uh, for the this quarter year on year. The reason is because margins have gone up to 10.7% from 5.1, because the interest cost has come down. So they have reduced their debt after the IPO. So the interest cost has come down, hence which has come down by 40% year on year, and that is coming into margins and profit. So the profit growth is super. It has come to around 57.5 crore last quarter, and profit has improved from around 4 crore to 116 crore for 9 months for this year. Now there is around 12% volume growth, and for Prestige and above, and Popular is around 10%. Value growth is around 11 and 12, and realization I've actually gone down for Prestige and above, but for Popular segment they are up around 3%. Revenue increased 8.84% year on year to 970 crore. Gross margin and EBITDA margins improved by 745 basis points and 535 basis points. EBITDA grew 97% year on year to INR 1.2 billion during the quarter. PAT grew to INR 57 crore, 57.5 crore during the quarter. Prestige and above witnessed value and volume growth of 11 and 12%, and same volume grew 12% driven by strong consumer demand during the festive season. For this quarter, Popular witnessed value and volume growth of 12% and 10.6%, and volumes grew 10.6% to 5.2 billion cases during the quarter. So they were flat around FY24 and FY25, but they are expected to grow around 12% and 10% in next 2 years in terms of revenue. And PAT is expected to, profit is expected to grow around 40% and 27% over the next 2 years because of lower debt. So the EPS is expected to be 8.3 in FY26 and 10.6 in FY27, taking a mean around 9.5. At 40 times, this stock can easily trade at around 360, 380. The ROE will improve, and the margins are also expected to grow better with lower debt. So this stock, it got listed in this year in July. Generally, it was at the similar level. After the results for October quarter, the stock went up, came down, and now because of this increase in consumption momentum, it's expected to go up. So at every dip around 360 odd levels, this is a buying opportunity. I have finished. We'll take questions now.